Okay, let's get back to some very interesting conversations around the world of commodities. And as always, you know, Tuesdays and Thursdays, you got this a bit of exposure and insight into what's going on in the world of commodities, things from what you eat, what you consume, or whether it's health, or has to do with what you use in your body, whatever. And so we try to bring the breakfast, the lunch, and dinner to your table. Sometimes it's just a fuel in your car, but sometimes it's the one in the fry pan, and that's what we're looking at this morning. Bolanle Olutosin, one of the economists and research analysts at Financial Derivatives Company. Good morning.
Morning.
I love this part of the conversation always, where we're trying to lay the table with food, and one of the very important commodity in the Nigerian cooking space, and not just in Nigeria, I think around the world, is palm oil. But let's hold that a little bit. What are the burning economic issues this morning? I understand that the issue of the central bank announcement over banks not paying some dividend, or some banks not paying dividend, is still making headlines. It's still on the wire.
So currently, that's the most burning out of all the issues that we have for today's session. The CBN has restricted some Nigerian deposit money banks from paying dividend, specifically those ones with high non-performing loans and those that don't actually meet the capital adequacy ratio. And secondly, we also have that the World Bank is disbursing about $486 million to fund power projects, which is always needed. We keep needing infrastructure, you know, investments in infrastructure within the country, specifically for power projects. And also the Eurobond issue as well, $2.5 billion has also, the federal government issued that. And in total, right now, we have about $7.3 billion. And also, Brent crude is also up to about $65 per barrel. And parallel market is flat at 63 naira to the dollar, 363 naira to the dollar.
Why do you folks think that this central bank's restriction of some deposit money banks based on non-performing loan ratio and the CAR is a burning economic issue?
It is, because the health and the business of banking is actually very important. Imagine in a case where you have high non-performing loans, why then don't you keep those, why don't you keep the cash within the earnings, retain those earnings and use them to actually grow the business than to be paying out, you know, dividends.
Well, you and I know we love dividends.
Yes, we do. The only downside...
dividend of democracy or dividend or whatever. We just love the word dividend.
Yes, we do. The only downside risk to that is the fact that, you know, this could, you know, push some shareholders to move from the banking sector to other industries that do pay dividends.
Shouldn't those investors or shareholders in those banks know that, look, investing is not just about dividend, but also with capital appreciation. But it looks like we want the best of the two worlds. Yeah. We want the capital appreciation, and at the end of the year, gather at the annual... I'm sure some annual general meetings will be very scanty by this year, because if they know there's no cash dividend, why attend? Yes,
but it also depends on the type of the investor. You know, I feel like in Nigeria, lots of investors don't know the type of investors that they are. For you to invest in a particular business, you have to also think about the longevity of the business. So if at this point you're noticing that the bank you've invested in is facing some issues, at that point, you should also imagine that, you know, the dividend payouts are either going to be low or none at all. So this restriction by the CBN is actually helping the long-term aspects of the business, of the banking business.
So as far as the central bank is concerned, save the banks.
Yes.
And let the shareholders take some part of the stick rather than the carrot.
Yeah, it boosts the capital buffers of each of these banks. Well, right now, I think we only have like 2 banks that are actually under this, you know, scrutiny with this restriction. But other than that, most of the banks, actually with the capital adequacy ratio, most of the top banks actually fit into this, you know, they meet the minimum requirements for the capital adequacy.
So they'll be able to pay dividend.
Exactly.
But perhaps those banks will also look at, well, if the central bank says this, we'll also pay dividend, but maybe we'll just cut back a little bit on this, hiding us under this umbrella.
Exactly. And also, you know, this restriction right now would actually affect banking lending and in turn might necessarily affect economic growth as well. If at this point, I'm seeing the CBN restrict some banks with you know, high NPLs not paying dividends, some of them might be like, okay, rather than, you know, giving out loans to some people, they will cut back on their lending, which will then affect spending and then investments and then economic growth.
So this is the news, but we haven't seen the end of it yet.
No, we haven't.
No, we haven't. It just came out. So let's go to number 2. I love the, and I like this when it came out a few days ago. The World Bank disbursing close to $500 million for Nigeria power sector, in particular around the transmission, infrastructure, value chain that seems to be one of the underbelly of our emerging electricity market.
Yes, so currently we've had, power generation to about over, 4,000 megawatts currently. But we've had situations where it goes below that and all that. But power generation, we're trying to stabilize that. But the key issue now is the distribution infrastructure to actually distribute this electricity. So if they invest in, as long as the investment is in the right value chain of this power, distribution system, then we should actually see our power generation increase. And it's a supply-side policy.
I like this. That's why I said I like this part. Yeah. Because the discos, as it were, and TCN, finding it difficult to make money.
Yeah.
So they're asking for tariff hike, right?
Yeah, yes.
Now, the Buhari's administration has gone to the World Bank and says, okay, let's have some discussion. And after some time, I'm sure they've been on this discussion for a year plus, and the World Bank says, come back, go and cross the T's and dot the I's, and eventually, now this money is coming in. So that will help the discos and TCN to bridge this gap with the Godfather, Big Brother money, which is from the World Bank, which will take, we don't know how many years we'll have to repay this. But of course, it helps Nigerians also.
It does.
That for now, there'll be no tariff hike.
Yes. So but that's, you have to remember that this is more or less a longer-term plan. Them investing the funds doesn't mean that the impact of this investment would actually be felt now. So right now, we should still, see what we're seeing in the economy right now. Sometimes there's no power, sometimes there's power, sometimes you have people that have actually paid, but they're not actually getting the power that they deserve and all that. So, but in the longer run, we should actually...
But if this money is on the table, it shouldn't take long for us to import those infrastructure and get them installed. It shouldn't take long
if we're focused. Sometimes you get these funds, these funds actually sit on the table for a very long time with the back and forth discussions on how best to use
Who does what?
Exactly, who does what and who does what and all that. So those are the key issues that, actually delay the implementation of the...
And that's where the devil is in the details now as to, well, the money is available from the World Bank.
Yeah.
How do we get our internal issues sorted and the Federal Ministry of Power get everyone on ground to get this done? That's one also good news, and I think I like that more.